More dollar demand into the new week with the buck up across the board against the developed currencies. The dollar's gains were mostly contained, however, limited to about 0.3%, with the pound as the only notable exception within this group, extending its run of 2018 declines and dropping by over 0.5% against the buck as worry about the Brexit outlook continued to disturb the UK currency. On the data front, German factory orders were a miss and may have factored into some of the euro declines, though for the most part the broad dollar demand is coming from the global trade front and what the market perceives to be a U.S. administration that won't be able to achieve its objective of effectuating a softer dollar. And yet we warn against such market views as we continue to see the U.S. administration pushing forward in an aggressive manner that will indeed encourage a weaker dollar. We believe the U.S. has enough ammunition and leverage to impose its will in this manner, and we would also remind of the fact that moving in this direction will also likely force the Fed to consider a less aggressive normalization process, something that will also take away from the lure of the buck as those yield differentials become less attractive. Looking ahead, key standouts on Tuesday come in the form of an RBA decision, German trade, German industrial production, the New Zealand GDT auction, Canada IV PMIs, and U.S. JOLTS job openings. As a final note on the emerging markets front, the Turkish lira continued with its collapse, sinking to yet another record low against the buck. That's all for now.